What's going on, guys? Welcome back to the channel. My name is Anfernee McLemore and this is my Roth IRA. And on this channel I made some videos about Roth IRAs in the past, but for both of those videos I talked about how to open up a Charles Schwab Roth IRA. And recently in the year 2021 I actually transitioned my Roth IRA over to Fidelity, so I thought it would be a great idea to make an update on how to open up a Fidelity Roth IRA in order to start investing in the most tax advantaged way possible. So this video is going to cover why you want to open up a Roth IRA in the first place, what exact tax advantages they offer, and also how exactly to do that with Fidelity Investments if that's the brokerage that you want to choose. So let's first talk about the whole reason why you want to open up a Roth IRA in the first place, and that reason has everything to do with taxes. You see, a Roth IRA is a special tax advantage account that allows your money to grow tax-free once you contribute your money to this. How this works is that the federal government allows you to contribute $6,000 annually to a Roth IRA with the promise that it won't tax any gains on that money in the future, meaning that if the $6,000 that you contribute grows to $10,000, you won't pay any capital gains tax on the amount that you made. And this tax treatment is especially powerful because there is no limit on what your investments could potentially grow to. Your $6,000 could grow to $1 million and you get to keep all of that money to yourself and not give Uncle Sam a single penny. I'm going to talk about next how much that tax saving could potentially translate to, but just knowing from a compound interest effect, you would rather know and trust that all of your gains are coming to you rather than potentially having to give away a quarter of your net worth to the federal government if you decide to make some sales on some stocks that you already own. And now I want to give you an example of how exactly those taxes affect your portfolio. So what I'm going to do is use one of my favorite websites called Portfolio Visualizer, which gives you a simulation of what your tax portfolio could be if you were to invest in different things. So now that we're over to my computer on portfoliovisualizer.com, what we want to do on this website, as I said, is pull up a Monte Carlo simulation. Now what a Monte Carlo simulation does is that it runs 1,000 potential scenarios for a future outcome based on historical outcomes. So based historically on what the stock market has done over the past 30, 40, or 50 years, it's going to give us a range of what it could do potentially in the future. Now obviously the results that you get are not set in stone, but it does give you a very good range of what it potentially could be. So for a Roth IRA, as I said, you can only contribute $6,000 annually to this. So for our initial amount, we're going to put $6,000 and we're going to hopefully max it out each year. So we're going to contribute $6,000 annually for the next 30 years. So depending on when you start, if you start at the age of 20, this could be 35 years. If you start at the age of 30, this could be 25 years. But because I'm 23 years old right now, I'm only going to put 30 years because that's a fairly round and average number in order for you to get your head around how this process works. So for right now, for tax treatment, we are going to put pre-tax returns and we're not going to change any of the rest of the stuff. And for what we're going to be investing in, we're going to keep it really simple and just do US stock market at a 100% allocation. So let's see what our portfolio could be if we max out a Roth IRA each year and we did not withdraw any money. So as we run this simulation, we get a nice chart. I'm not going to adjust this for inflation for the purpose of this video, but we can see that at the end of the 30-year period, our portfolio could be in a range of $859,000 all the way up to $4.5 million. This line down here is the low range and this line down here is the high range based on percentages of what the stock market has done in the past. So what I'm going to do for the purpose of this video is take the 50th percentile and say that in 30 years, the portfolio will be valued at $2 million. Now that is a lot of money, especially considering what you put into the portfolio. So in order to do a quick calculation of what we put into the portfolio, we're just going to do $6,000 times 30 to see that we put $180,000 into this portfolio that could potentially grow to $2 million. Now this video is about a Roth IRA, so this is $2 million tax free. However, if you did not put this money in a Roth IRA, if you went on and sold these securities, you will be subject to tax. So let's assume that you did the exact same thing, but your contributions were not made within a Roth IRA. And I don't want to overcomplicate the tax situation, so let's do the next part on my phone. So what we're going to do is assume the exact same numbers. You had a portfolio which is not a Roth IRA anymore that you contributed $6,000 a year into that grew to $2 million. So your end amount is $2 million and your contributions you want to subtract from that amount because you're not taxed on the amount you contribute. So your contributions will be minus $180,000. That leaves you at $1.82 million in gains that would be subject to tax if you were to sell this portfolio. So right now, as of the year 2022, the long-term capital gains tax is at 20%. Now it is pretty hard to judge what it would be at in 30 years. If there's a string of Democrats in Congress, then it may be higher. If there's a string of Republicans over the next 30 years, it may be a little bit lower, but assuming that the long-term capital gains tax is going to stay steady, we're going to assume that we're going to be taxed 20% on this portfolio. So we'll take this $1.2 million amount, multiply it by 0.2 to see that we'll have to pay $364,000 in taxes, leaving us at a net portfolio value at $1.636 million. Now, how I got this number is I subtracted that tax number from the overall $2 million, and that's how you see that you have about $1.6 million left after taxes. And the only difference that you have $400,000 less now is because you chose to put your money in a regular brokerage account that's taxable rather than in a Roth IRA. So is opening up a Roth IRA potentially not owing the government $400,000 someday in the future? For me personally, I would say yes. And as I may have mentioned at the beginning of this video, I plan to show you exactly what is currently in my Roth IRA. But before we do that, let me show you how to open up a Fidelity Roth IRA for yourself so that you can get the process started. And the process to open up a Fidelity Roth IRA is very simple. What you want to do is go to fidelity.com and click on this big orangish button called open an account. So once you hit this, you have 5 different accounts that you can open. You can open up a rollover IRA, a Roth IRA, a traditional IRA, a brokerage account, which is one of the most common accounts. Brokerage accounts are the accounts that you see on Robinhood, on M1 Finance, on a lot of different accounts that are not tax advantaged. So brokerage accounts are definitely the most common. And then you can also open up a cash management account. And also if you click see all accounts, they do have a couple of other options, but I am going to go back and just click open now. So now I'm going to go through the process of actually opening an account, but I'm going to cancel it at the very end. So if you're not a Fidelity customer already, you will click no here, and then it gives you a prompt to click next. So after this, you want to enter your first, middle, and last name, enter your social security number, and any other information that they ask for, like your date of birth, your citizenship, and your phone number. And this is all to verify that you are a U.S. citizen, because you do need to be a U.S. citizen to open up a Roth IRA. You would next enter in your address. So I'm going to put some dummy information in here just so I can move on to the next screen. And it looks like they recognize my login, so I can't get much further than this. But after you do put in that information, you would then be presented with a screen that looks sort of like this with your new account here on the side. But now let's switch angles just for the sake of switching angles one more time so I can show you what's exactly in my Roth IRA. So as of right now, my total accounts with Fidelity, as you saw, it was $23,566. But my Roth IRA specifically is worth $14,767 because I've been contributing to it since I graduated college for the past 2 years. And right now you can see as of the year 2022, I contributed $5,575 to it of my $6,000 limit. Now I did max out in 2021, but as I said, I was with Charles Schwab, so Fidelity, even though they don't count it in their little counter here on the bottom. And in order to see what my investments are, you can see that I have a very simple portfolio with only 3 index funds in the portfolio. The first index fund that I invest in is FSKAX, which is a total US stock market index fund. This index fund makes up 67% of my portfolio, and anytime I add more money to the portfolio, I try to add money in ways that keeps it balanced in the percentages that I choose. The next index fund that I invest in is FSRNX, which is a Fidelity real estate index fund, and this index fund makes up 10% of my portfolio. And coming in last is FTIHX, which is a Fidelity total international market index fund. So I have both a total US market index fund and also a total international market index fund, and this index fund makes up 27% of my portfolio. So I'm sure you already saw the all-time gains on this, but on the total market index fund, it is worth $9,054 and up about $160 since I purchased it, which is great. I don't really look at the gains now because this is a very long-term investment, but for the total international market, it's worth about $3,900 with a $75 loss since I purchased, and on the real estate index fund, it is worth about $1,400 and up $92, which is great because that's up almost 6.72%. And the thing with this index fund in particular, I'm only going to put money into this index fund until I actually start buying rental property. So when I actually do get some real rental property exposure in my physical portfolio, I probably won't put much more money into this Roth IRA portfolio. So the percentages may switch to 5% real estate and 32% international. And then a very good question that you may be asking next is, why choose Fidelity in the first place? What makes this the best company to open up my Roth IRA with? And to answer that question as simply and as honestly as possible, there really isn't a best account to open up a Roth IRA with. I've had Charles Schwab in the past and I've had Fidelity, and the difference is not much between the two. Open up a Roth IRA is more about the actual tax advantages of the account more than what slight benefits you may get from opening up with a different brokerage. And the reason why I switched over to Fidelity was very much aesthetic. I just like the look and feel of the platform a little bit better than Charles Schwab, so that's why I decided to open up my account with Fidelity. However, if you like the look and feel of Charles Schwab, you'll be able to invest in much of the same mutual funds, have the exact same tax advantages, and also be able to build wealth at the same time. I've also considered opening up a Roth IRA with M1 Finance, and I can say I would have the same, if not better, of an experience over there as well. But with all that being said, I really hope you did enjoy this video. If you watch all the way to the end of this video, drop a like on the video for your boy, as it does help me and the channel out so much. Also, I woke up to a very pleasant surprise today. When I checked my public app, I saw that another person signed up, and this time when I claimed my reward, I got $50 worth of Amazon, which is one of the biggest rewards I got so far. So if you want to earn a little bit of free money like this, just go down to the link and sign up to the public app. You don't have to deposit any money. All you have to do is sign up, and when you sign up using that link in the description, both you and me will get a free fractional share of your stock. It's usually about $3 to $5, but as you can see, you could get some big rewards if you take advantage of that offer. However, don't forget to subscribe as well if you like content like this, and I'll see you in the next one, guys.